Welcome to The Explainer. Today, we are looking at a fascinating tug-of-war going on in the Ethereum market. You've got the price chart basically screaming buy, pointing to a huge potential rally. But at the exact same time, the market's biggest players, the whales, are betting millions that it's all about to fall apart.
So, which signal do you trust? On one hand, you have classic technical analysis flashing green. But on the other, you have the market's giants betting big on red. Let's dig into both sides of this because it's a really interesting setup.
Okay, first up, let's explore the optimistic case. This argument comes straight from the price chart itself, and this is the story that the bulls are really banking on right now.
So if you look at this 4-hour chart, the whole bullish argument really kicks off with that purple box down at the bottom. Traders call that a demand zone. You can see the price hit that zone, and then it just bounced hard, moving up so sharply that it broke right through that downward sloping green trend line.
Now that move actually has a specific name. It's called a falling trendline break. And what makes this particular one so significant is that the price tested that line 3 separate times before finally punching through. For technical analysts, that's often a really powerful signal that the old downtrend is losing its grip.
So if the bulls are right, and this momentum keeps up, where could the price be headed? Well, the analysis points to 2 key levels to watch. A first target around 37.50, and if this rally really catches fire, a potential push all the way up to $4,200.
But that's just one side of the story. See, not everyone is buying this bullish breakout. In fact, some of the market's biggest players are betting heavily that it's going to fail spectacularly.
This data from the Hyperliquid exchange gives us a peek into what the whales are thinking. And just look at that bottom panel, the whale net positioning. It is almost entirely red. That means the biggest traders aren't just sitting this one out. Their net positions are overwhelmingly betting on a price drop.
So these whales are actively short selling. And in simple terms, that means they're borrowing Ethereum to sell it right now, hoping they can buy it back later at a much cheaper price and pocket the difference. It's a huge bet that the price is heading down, not up.
And this quote right here, it just perfectly captures their conviction. The source analysis suggests that these large traders have actually increased their short positions recently. So they aren't just holding their bearish bets. It looks like they're doubling down.
This sets up a major conflict in the market, right? You've got a textbook bullish chart pattern colliding with a massive wall of bearish money from the whales. One of them has to be wrong. So, what happens next?
It really boils down to 2 main outcomes. Scenario A is the short squeeze. If the price starts rising, those whales who are shorting are going to be forced to buy back their positions to limit their losses, and that buying can cause a really rapid price spike. Scenario B is that the trendline break fails, the whales are proven right, and the price tumbles down toward a key support level.
Let's look a little closer at why a short squeeze can be so explosive. It basically creates this powerful feedback loop. As the price goes up, the short sellers start losing money. To cut their losses, they're forced to buy back the asset. But all that buying pressure pushes the price even higher, which forces more short sellers to buy. And all of a sudden, those bearish bets become rocket fuel for the rally.
On the other hand, if the bearish pressure from the whales just overwhelms the buyers and that trendline break turns out to be a fakeout, the analysis identifies this $2,500 level as the alternative target. And hey, that's the key demand zone the price bounced from earlier.
So, with these 2 conflicting horses battling it out for control, what are the key signals we should be watching to see which side is actually gaining the upper hand?
All right, here are the 3 key things to keep an eye on. First, does that falling trendline hold as new support? That's huge. Second, what do the whales do next? Do they start closing their shorts, or do they keep adding to them? And finally, if the price does fall, you gotta watch that $2,500 demand zone. That's really the critical line in the sand.
And as always, just a quick reminder that this explainer is based on publicly available analysis and it's for educational purposes. It is not and should never be taken as financial advice.
So this leaves us with the big question. When a bullish chart goes head-to-head with the market's biggest players, who comes out on top? That's the showdown we'll all be watching.